And therefore, Jyotivardhan Jaipuria, independent market expert, joins us now as our market master. Morning, Jyoti. Thank you very much for joining us. This is looking a fairly steep fall and widespread fall that we are seeing. What does it look like towards the end of the year? Are we going to look at 7,500 getting breached?
Yes, so, typically the year end is always very good, but this time we have this Fed overhang on all markets globally, and I think that's, till that event gets over, we probably will see markets being nervous. It's possible that once we actually have the Fed hike coming through, then markets celebrate a bit, saying, okay, the event is out of the way.
But it doesn't seem to be only the Fed hike, isn't it? There is a second round of commodity slippages that we are seeing over the last 1 week. Crude took a plunge 6% or 7% lower since the Friday OPEC meet. Yesterday it was followed by iron ore and a few other commodities. Will there be another growth scare round of falls?
Yeah, I think the growth scare is not disappearing, even though, yes, the Fed sees the US economy doing very well. I think China is still going to be a concern, not just for this year, for the whole of next year. In fact, if you look at the last time we had markets being very wobbly, it was on the back of a Chinese devaluation. And I think we'll start getting fears next year again of, okay, will there be a currency devaluation, a round of competitive devaluation where China devalues, everybody else devalues. So I think that fear is not going to go away. It's not like a 3-month thing. It's probably going to be a 1 year or the 2 year phenomena where China continues to slow its economy. And if the slow is much more than what they anticipated, they probably will take measures like, devaluing their currency.
Okay, well, there's some more casualties now in the mid-cap space. Bata is falling quite a bit. In fact, the management did meet with analysts and talked about challenges that remain in the form of sustained threat to many of these companies because of online retail. So Bata has now fallen, I think, 20-25% from the recent highs. Jyoti, morning. That's the big scare. So far this year, the story lay in the mid-cap space. But now we're seeing a lot of mid-cap stocks unravel quickly. How do you approach mid-caps now?
Yeah, so if you see, like the large cap indices are close to the lows they were, towards August, but the mid caps are still well away from those lows. And I think, if you see the mid caps, typically they tend to hold up, but when we see markets starting to get nervous, they come off much, much faster than what the large caps do. So probably so far you've seen the mid caps hold on, and now you're starting to see some of them come off, unravel. Mid caps are expensive, so they're not cheap. So that we've seen that they are expensive relative to the large caps. I would still say over the next 2 years that mid caps will do better than the large caps, but near term I think I'm a little concerned about the valuations in the mid cap space.
It's not as if bonds have given us money either, Jyoti. So if you have to hide in equities, where do you hide for 2016?
So, though I don't like the market near term, I think 2016 will be a good year for equities. Actually, I'm feeling more comfortable on the economy than what most people are, and generally I'm very bearish, but I think the economy is actually slowly starting to bottom out and will probably show a turn in towards the positive side in 2016. So I think we'll see a nice rally. I think for the change, earnings as we head into second half of 2016 will show double-digit growth. And they'll actually show double-digit growth because so far we've seen analysts forecasting double-digit growth and the growth never comes. So I think we'll get an earnings surprise in 2016. It will be probably back-ended, but I think that will make 2016 be a good year for equities.
So when you say earnings surprise, which sector do you see the earnings surprise come in, Jyoti?
So I think, we'll see the consumer, especially the urban consumer, do well as a consequence of, interest rate cut as well as the pay commission. I think we'll see some of the infrastructure stocks start to do well also because there's been sustained activity in roads, in railways and in defense now. So some of this will start translating into numbers as we go into 2016. Probably, a year from now, we'll start seeing some improvement come over there. So I think, and once these top line starts to improve there, the margin increase will be quite sharp because the operating leverage will kick in. So I think we'll get a combination of improving top line and improving margins in a lot of the domestic oriented stocks for next year. which should start, to mean that earnings probably actually will end up next year at 12% to 15% growth.
Okay. Urban consumer, yesterday we spoke to some air condition makers. They weren't very gung-ho about sales just yet. But I guess air condition is the wrong time. It's the wrong time to call people now on air cons. But is it only consumer durables or maybe FMCGs that you will look at?
So, it's like the urban consumer, and like I said, infrastructure, some names will also start to do well. So we'll probably see pickup coming through in cement, because, that's been one story which a lot of people played for the last 2 years, but we have never really seen that pickup coming. So I think cement will actually pick up. I think we'll have some of the infrastructure which are more geared to roads, which are more geared to, probably defense start to do better. So there'll be a lot of domestic names which will start to do better. I think, the domestic story was something which was just not picking up, though there was some hope last year in the stock market. So I think that will actually start delivering probably in the second half of next calendar year.
All right, we hope your optimism rubs off on the markets, because it's not. In fact, currently the market is at the lowest point of trade. But thanks, Jyoti, for joining us. The Sensex is now down 100 points and the Nifty is well below the 7,700 level.
And the advanced declines is now